All right, guys, welcome. Sorry for missing last week's call. I was not in my office for like 2 days, so that's my bad on that. But I just want to go ahead and go over everything pretty much from last Zoom up until today. I didn't post too much in the groups and all that, but I have been working on a ton of stuff, and a ton of stuff has been progressing. Um, and let's see, like the if you guys remember the announcements that I made here, maybe I could find it. Everything in terms of pretty much what I'm working on from here into the future. I've already completed the fundamentals course, like the excuse me, everything in terms of the content for that course is done. I just need to have my guy going and making his videos and all that stuff. Um, the suite model, everything is in terms of the concepts and everything that I'm gonna put in the book, that's also completely done. I'm going to the what I worked on last week, which was it took me quite a while. It was creating the variants of the implied sweep. So obviously, like I can say that as a implied sweep is like an unsubstantial new lower high plus an engulfing, but there's like many kinds of engulfings because the engulfing concept in and of itself is a bit broad. So I did want to make different types of sweep model or different types of sweep entry protocols, if that makes sense. So different types of engulfings to enter off of, right? Whether it does X action or Y action or X and Y action. Um, and other than that, ASIV has been working okay. I'll show you guys I'll probably post a stat here at the end of the Zoom. I'll post it in the group. And other than that, I'm just now just trying to get some more reps in and think of more content that I can start making because I do want to start making more content once all that stuff is done, which I'm hoping the course and the book is done within like the next 6 weeks. So 4 to 6 weeks. Let's just put it at that. But yeah, so um only one thing to cover, I guess, during the 2 weeks since our last meeting, which was just a simple implied sweep. This is, I think, variation two. Excuse me. Like I said, I have probably like three variations right now. I'm still going through all of my data because I'm still trying to see if any other entries fit another criteria and if that kind of makes sense or not. But yeah, when it comes to this implied sweep model, just very, very simple, right? These kind of happen very, very back to back. Um, so especially in a trending market, these do kind of happen very, very back to back. And the reason for that is just because I like to trade based on CBOS continuation, right? Direction liquidity execution, right? Direction liquidity execution. This is also within like a pretty much right next to my kill zone. So when it's in my kill zone, I have an implied sweep, I have a continuation, then it kind of just makes sense for me to uh take this execution. I'm gonna take this for you guys. Here we go. So CBOS, obviously internal structure is bearish, but external structure is bullish, right? But we do come into a sell to buy zone. So once we come into the sell to buy zone, I have to see what happens after the CBOS. And as you can see, we are not creating a substantial new low. We're kind of just starting to have some turbulence around here. So once we have some turbulence around here, I have my M30 engulfing. I think this one I'm gonna consider protocol two. Um, so protocol two has been pretty much given here. I was a bit aggressive here. I low-key should have put my invalidation here. And the reason for that is because since the entry itself is already very aggressive, I just don't see um any difference in making sure that I have my invalidation set as my stop loss rather than just trying to squeeze out the extra bit of risk to reward, as you can see there. So that was a mistake that I made there, but I'm still willing to accept that risk. And obviously, I'm aiming for my immediate high, so that is about a 1 to 5.5. But based on the before after, it was about 1 to 7. So usually what I'm getting is like around like a one, like a 5 to 1, 4 to 1 minimum. At least that's what I've been seeing. Right, like here, this was another one just for the next day. Right, and this is actually protocol one. I would probably consider this a protocol one where we swept this low. I think this was a news event. I may be mistaken on, but I don't think so. Um, but the reason why I had a lot of conviction here is solely because we had equal lows be ran, external low be ran. Yo, guys, can you guys please mute your mics, guys? Mute your mics, guys. Hold on. Come on, guys. Okay, my bad. Um, so equal lows pretty much taken. We took out external low as well, and then we had the immediate engulfing on M5. But this, I don't want to consider this a high conviction setup. I just kind of went more so on intuition, just because we are sweeping lows. We're in my kill zone. We don't create any type of new low. We just sweep the external low, and we have the engulfing here. I believe this is so fast. I believe my entry was even like around here. Um, but this one, I wouldn't consider it to be an ideal implied sweep. I would have actually preferred a M10, M15. But if we go to M10, this didn't go off, and I think on M15, it didn't go off either. So once we go to a bit more, yeah, here M30. By the time we actually got that engulfing, because I have been liking these three time frames, M10, M15, M30, it would have been too late. I don't consider this to be um, worth the risk to reward, even though it is not necessarily bad, but I'm kind of aiming for at least like a 4 to 1 here. So this one, I don't necessarily like it, but it's it still fits the criteria. So that's that. I think that's kind of just everything from the channel here. This is just the before after. I didn't take a trade on this, just because this is a hardcore reversal. If you guys want to see that real quick, would be here the 9th. Leave it here, yeah. Back here. So that would have been right here, essentially. So this is kind of just one of those timing meets liquidity sweep. So the entire reason why I was looking to sell here, or even just looking at a bearish bias, just to put it like that. Okay, so sorry about that. Um, the only reason why I didn't take a trade here is because one, it's a hardcore reversal. If I was to have taken a scenario, I kind of need the transition here. And we didn't reach the full TV here. I mean, the full external high here, but I just kind of had a hunch with the time of the day, which is right after the open of London, and we swept Asia high, and then I started to see turbulence, and so I just kind of anticipated a bearish move. But this wasn't a trade by any means. It's kind of just one of those scenarios that kind of just fits in with the narrative, and I kind of just intuition my way into anticipating this to come down, but kind of irrelevant here. But what I do want to start going over is a couple of the trades from this week. So this was last night. Actually, let me go backwards. Yeah, I'm gonna go backwards. 1 second. Okay, that works. Um, scenario one, GBPUSD. This was a buy during, I think it was Tuesday. This was before Wednesday, sorry, before we had FOMC, and then FOMC kind of just gave me the rally that I wanted. So the backing here, Yeah, so the backing here, I did a review for here. So sorry about that. So I framed my trade here based on obviously we're very, very bullish coming into the day. But before, right, my execution, which is during New York session here, which is right here's the New York Open. I wasn't up for London for the day, but what I really liked when it came to London session is the fact that we are taking out Asia low and we are taking out two relatively equal sets of liquidity, points of liquidity here. Sorry, right? We had low, low, sweep, sweep comes into LGC, but more importantly, right now that we have swept this low, right, I kind of have a range to play off of. So if I have a range to play off of, we swept the range low, so I'm now anticipating to take out the range high. But more importantly, because we are externally bullish, I'm also looking for an external target, which that external target is based on, right, this previous low here. So with this, I mean previous high here, sorry. So this, I use this as the immediate point of liquidity, and I didn't want to extend too far because I don't want to be too hasty with wanting too high of a TP. I have to understand internal models, external targets, not internal model, external of external of external target. So this would be an external of an external, whereas the immediate external, sorry, would have been right the previous high here. So I kind of used, right, this initial sweep slash LGC as a frame to give me a bullish bias, but I executed based on an order flow disruption. And if you guys don't see the order flow disruption here, it's pretty much a sell to buy. I mean, a buy to sell zone, as you guys can see here. You can see that we actually, if we refine it, it did react here, but that doesn't really matter to me. I just care the fact that we have a buy to sell model. We have one reaction that gives a very strong reaction. Then we came back, gave a second reaction, and this is a confirmed reaction because we had the internal structure breaks here. So if we have internal structure breaks off of a POI, then that's still technically valid. But it's until we see, right, this sell to buy zone that broke through the POI and confirmed order flow disruption. So I merely just use the internal sell to buy as my entry and invalidation, and then I'm aiming for the external move here. So this is about a 1 to 3, which is typical-ish for an order flow disruption model. But if you guys can see closely here, there's actually another model here, or actually a better entry here, if I say. Um, and by that I mean that we took internal structure after the reaction of the sell to buy, right? So if we're looking at now an internal move, we have an internal sell to buy here. So if I was to have taken even this perimeter, then that's also 100% valid in my opinion. And that would have been actually better risk to reward than my original position, right? As you can see, it's almost a 1 to 4, right? And if I was actually holding a bit further beyond FOMC, then let's just say I was going to the open of that buy to sell zone here, then this could have actually become a bit more, a bit higher risk reward, almost double here. But like I said, because this is already very bullish, and I'm focusing on the internal models, I don't necessarily want to get too hasty. Plus, it is FOMC, but I just know that FOMC or just any news event related to me is just pretty much an excuse to push us in the direction that we're supposed to go to. But once it pushes us that one direction, you kind of have to get out right as fast as you can, just because you don't want the efficiency factor to kind of hit you and you lose the R that you have in your trade. Right? And by efficiency, I mean obviously nothing can buy and sell forever. And all the inefficient pricing left over by the news will probably be filled either immediately or eventually but that covers trade one, order flow disruption. This one, right? EU, I did take a loss, right? I took one loss and then I re-entered again once I got a second entry here. And then that kind of gave me the full model to the upside. So this one, definitely one of the best trades I've taken in recent weeks, I would say. And this is kind of what I was talking about over the past couple of weeks with pretty much the sweep model being the revival of quote unquote high risk to reward. But by that I mean that we can, because the implied sweep is very aggressive by default, then I'm able to really set a small perimeter for an entry and get a very high risk reward if, right, certain things do align. Like obviously here, right, the reason why I was looking for a SPY model here, right, I was looking for the sweep. So obviously here we have CBOS, right, which solidifies this is higher the range. We could say this is low of the structural range, but internally we have a low into a high. So once I see this here, right, if we see a move into the upside, I'm sorry, excuse me, if we have any type of sweep model here, which technically here would have been a variant two, but unfortunately I wasn't up at the time. So what I had based my entire scenario on was the fact that we had swept, right, this internal low here, causing the external CBOS, and we had internal OFD. So once we have internal OFD, then technically my entire region to buy is the sell to buy, right? Because you can see that we did take out liquidity here, sell to buy, came back into the point of interest, and that should be any excuse here to look for a move to the upside. And my first scenario was based on seeing this internal low be swept, right? And we had the M5 engulfing here. So as soon as we had the M5 engulfing here, I was looking to take my entry immediately at the closure of the candle and put my stop loss here and then look for the move into the upside. But unfortunately, that just didn't work. And that's okay. That's just part of the model. But my second entry here, where we can see that we even have an internal second sweep, right? Plus the engulfing here, right? Now that we had the second engulfing here, I actually put in risk again, just because, right? Technically, like I said, my entire buy region is the sell to buy region. So who's to say that maybe it would even take me one more attempt to take this, and I think it's worth it 100% of the time. But really, I really wouldn't take a scenario more than like 2 to 3 times, unless, right, I do have like a stop loss at invalidation, and if that invalidation is hit, then I'm completely out of the scenario, right? But like I said, we took one loss here, took the second engulfing, and then from here we kind of just continued price into the upside, and my target being the high of the range, right? And this one went for even further as well, but this is more so the textbook setup, right? With the sweep model, I'm looking for, right, any type of liquidity sweep, whether it's in an extreme demand or an extreme supply, which you're being in extreme demand. I'm looking for um, some type of engulfing sequence to then get me to from the low of the range to the high of the range. That's kind of the entire thing. And the reason why I'm noting the range is because obviously we know that structure ranges are lows that create highs, lows that create highs, but we know that the first break is just the CBOS, which pretty much solidifies that. So let's just say this break solidifies the low, this break solidifies the high, and all we're looking for is the continuation higher, right? And the reason why this kind of is the epitome of the model or our three-step framework, direction, liquidity, execution, is because the external is bullish, right? Meaning our direction is usually always going to be really just going to be given just by how we're coming from low to high, and liquidity that's obviously timed through the unsubstantial new low, because we're not creating a deep lower low here, at least internally. and the execution is based on the engulfing sequence. So this is kind of just a DLE built-in model where direction, liquidity, and then execution, right? And then this being a traditional sweep, rather not an implied sweep, the traditional sweep can usually be a bit more conservative. So that's kind of the gist on the model. But anyways, last scenario, this was me using a sweep as a frame rather than a entry, right? Kind of like what we did here with EURUSD previously, right? So this was last night. This is about 7 hours ago ish, 7 hours ago. Um, and the reason why I was looking for sells now, especially after FOMC, right? If you guys can see here on dollar, if you guys have been on the Zooms for the past, let's just say 2-3 months ish, you guys know that we've been bearish on this. It's probably been like 6 weeks now ish. Right? If you guys remember, we've been talking about this 12-hour candle came in, reacted from it, right? And we're anticipating that to be right high into low retracement, and then we've kind of just been anticipating at least the break of this low. So FOMC actually caused the break of this low, or the sweep of this low. And as soon as we got the sweep of this low, I kind of just anticipated that, okay, we've just taken out a target that we've been waiting for, excuse me, for since the beginning of August. So since the beginning of August, 6 weeks ish, we've been waiting for this move to pretty much give us that delivery into right the previous low of the structural range. So now that that's been swept, and internally it looks like after this we kind of just started to rally, right? So just due to this, especially after we have this move here, structural disruption plus high momentum, I'm kind of anticipating this to be right pretty much bullish at least for the rest of the week. And I'm aiming for at least here to be bullish in terms of dollar. So just knowing that, I have my bias. So here, 7 hours ago, which was here, right? If we're reading price action, right, we have a big wick here, like I said, from FOMC, right? And after that, we broke structure. So that's an LG. So because that's an LG, that doesn't mean that we're necessarily bearish just yet, but at least all that we can know is that internal structure is technically bearish. But as soon as we sweep here, and then we have, right, whether you call this a structural disruption or an LGC, depending on the time frame that you're looking at, we now have, right, an internal bearish structural range. So once we have this structural range, right, I am now extremely, extremely bearish on this, at least until we break this high, right? Unless we then have a delivery down and then that new lower high is taken, which means that now it would be bullish if we take this out. But at the time of the trade here, right, we had not taken out, right, that low of the range. So that's pretty much what I was aiming for. And if we are to look here, come into this, right, this is my trade scenario here, right? Like I said, I'm using, right, the sweep, which is here, as my reasoning to um pretty much continue this lower, and how I use, or why I'm using even this area as an area of interest is if we're looking at internal structure here, we can see that there's a sweep here, creates a new range. So I have a high into a low, right? I have the buy to sell that caused, right, this break of structure, that being here. So obviously this is a bit big of a point of interest for me to use. At least it's too big for my liking. So I'm gonna always look for refinement, and I obviously need a model to play off of. So as we can see here, let me take this off. So right, very slim, but we did wick out this previous high here. But more importantly, after we wicked that, right, we had a very strong bearish engulfing, and after that very strong bearish engulfing, this actually could have been my ideal entry if I'm being honest. Um, once we swept this high, and then we had that 1, 2, 3 candles be engulfed, right? Then I would have looked for maybe some type of sell here, but I wasn't looking at this at the chart here at this time. And this my entry would have been obviously aiming for the previous low, but I'm aiming for this previous low because that's the low of the range, right? And that would have been potentially entry number one. But my entry came after that because if we're going to M1, we can see here, right? There is some type of turbulence point here, and there is some type of demand here, right? And I know that there's demand here as well because we did have that bullish reaction here. We can see bullish reaction here, and then that we came back, we tested again, we gave another reaction, right? This would have been potentially a high risk entry. And the only reason I would have taken that is through the engulfing. But once we have this mitigation give us that move into the downside, then that's order flow disruption based on this POI. So once we have that, I now have a sweep here, right? As you can see, we swept that high and then we have the order flow disruption here. So once we have that order flow disruption, right, then I'm pretty much using my entire region as we're using here, right? Or we're not using the M3 engulfing here, or M2 engulfing, sorry, as my entry protocol, which would have been right here. Right, so order flow disruption, internal sweep, right? We have a bearish structural range, and I'm aiming for, right, the low of the range here based on the external bias being bearish due to having the LG present here. So high, low here, sweep, and then sweep again, and then the continuation here into that low of the range. And I could have held that longer, of course, but all I know is that I want to get to my liquidity point, and after that, I'm kind of just out. So my entry was based on, like I said, M2 engulfing here. We came back, and if we're using another point of interest, this isn't something I probably would have traded, but there is an M2 POI here that we came into that, and then we had a very strong engulfing candle. So I kind of just took my perimeter based on that, because also that is an M1 break of structure, as you can see here. So if we're breaking the structure here, we've now shown unwillingness to continue higher because we're not breaking out the high. So I'm using that as my perimeter to be bearish, and that's about a 1 to 6 almost. So overall, very good. And if you guys are wondering, I can't move my SL here until either I have an LG or I take out, right, the previous external range or the previous range here at the present. So even though this broke, I can only move my stop here. So couldn't really move my stop here, and then we came back into turbulence point and completed TP. So that's pretty much my scenarios for today. Right, as you can see here, pretty much my scenarios here. Any questions, concerns on the trades before we start getting into all of the case studies? Or any questions on the updates as well? Where in the boot camp? I don't know what boot camp you're talking about, bro. If you want all the models, if you want everything, pretty much everything in one, that's going to be in the book. I don't think I have videos covering the exact models individually. Everything's kind of in the book. Cool, but any questions, concerns on the trade recaps? The sweeping player just entered off the engulfing after the sweep. No, no, it's not. That's no. I explained the there's different types of engulfings, right? Like even if you go back to the EU scenario, where is it here? If we go back here, there's different types of engulfing. So no, it's not just a sweep. It's not just an engulfing sweep because that's what I wanted it to be at first. but then I realized that the engulfing concept is just too, it's broad. So now different types of engulfings are going to dictate whether or not, right? Because you can see here, we're sweeping this low and then we're engulfing, but that lost. And then we're sweeping this and then we're engulfing, and then that worked. But these two engulfings are two completely different engulfings, right? As you can see there. So no, it's not just that. What makes them different? Obviously, bro, I'm not gonna say that. That's what's gonna be in the book. Um, like for example, even here, this is a different type of engulfing. Like here, this like here, let's just say we swept the range low, then you could say that there's an engulfing here. And if you would have taken that with stop loss at invalidation, then that works out as well. Right. But then if you're a bit more conservative, because the difference with the implied being just the engulfing or just different types of engulfing sequences, and then the traditional sweep is the traditional sweep, which would have been probably considered here or even here, right? Depending on how low of a time frame you go, is the fact that the traditional sweep will have that confirmation internally, but you have to have the timing as well to try to catch this entry. Whereas if you just take the engulfing, right, but this isn't one that I would take. Um, but if you are to just take the engulfing or study the engulfings after the range low is taken, then this does have a lot more time for you to kind of get in, especially because I'm really only I'm really prioritizing M10, M15, and M30 for these types of entries. Those three time frames. Those are kind of just been my bread and butters for that. Just because M5 has become a bit inconsistent, and if M5 is a bit inconsistent, then you can imagine how M1 would be. But yeah, obviously I'm not gonna go over the protocols right now, but I'm not gonna go over that. That's gonna be in the book. And then once I finish all that stuff that in the course, then I can probably I do want to make like a market structure 2025 update. I do want to make like a small presentation for that, give all the rules for that, and kind of just clear up all the confusion on that. Like obviously we want to go over structural anatomy, we want to go over um solidified points, structural ranges, ranges within ranges, et cetera, et cetera, et cetera. And then I'll probably just throw in I'll throw in the fib model there as well. But I'll need to make a presentation for that and all that. And that reminds me too, whoever was asking about quantifying the stuff, when I was making my indicator, right, I actually had to update my structural anatomy. Like if you guys watch the core structural anatomy, which is the the different types of levels. So I used to have uh obviously micro, scalp, minor intraday, major intraday, swing, and position. But what I did, right, when I was trying to set time frames to those types of structural levels, like I see here, like as you guys can see, I have scalp, I have micro, and then if you go to 15, I have minor intraday. If this wants to load, minor intraday, major intraday, major intraday, minor swing, major swing. And then I have minor position, major position. The reason why I did that was just because I went in. So what I had done with every pair, I had created or I had pretty much zoomed in. And but just starting from M1, I kind of just wanted to see how many levels would I have, right? So this would be one level, and then I zoomed out, right? And then I saw, okay, well maybe then there's a new range. This isn't exactly how I do it, but it's just to show you guys what I did. And I did this with 9, 10 different pairs, just to see if I could match certain levels. And I ended up getting like 9, 10 levels every single pair. So um that's another one of those things that I feel like I started to imply, which is the level of structure. But really what's more important is understanding that there's a hierarchy. And now I actually had to just to make the indicator work a little bit better, I did have to add different levels of structure. So I want to include that in the new market structure video that I made. But yeah, any questions, concerns before we start going over case studies? Let me see. Will there be a recording? There's always a recording, brother. There's always a recording. You could even see on Zoom that it's recording. But yeah, any questions? Any questions, concerns, guys? Do we have any new people here? Do you like? I know Lex Waves has been pushing my stuff, so I don't know if we have any new people here. Cool. No questions. No questions. Okay, new. Do I count as new? Yeah, you do, bro. Yeah, you do. You count as new for sure. Looking forward to the new book. Yeah, man. That's gonna be my best. I'll probably throw in like my table of contents for you guys soon. But the reason why, also the reason why that model just works is, do you guys, have you guys ever heard of the concept, or just have you guys ever heard anybody talk about, let me pull up a model. Have you guys ever just heard people say that if your strategy follows SMC, then it's always gonna, or then it's gonna work because it follows the idea of SMC. Have you guys ever heard that? And do you think that's true or not? Right? Does that question make sense? Half and half. Okay. You haven't heard it? No? And somewhat true. You guys have never heard that, really? Okay, well, yeah, because I'm not really like, I don't consider myself an SMC trader. Um, just because I have completely different truths. But it's half true. Okay, like what does that mean? What does half true mean? What does somewhat true mean? It's either you think it's true or it's not. Like, even SEC is saturated, and even SMC is saturated. What does that mean, saturated? That doesn't, saturation doesn't matter, bro. Like retail consists of like 4%. Like, unless I'm mistaken here, like retail money is like consists of 4% of the amount of money in the FX market. Let's actually look that up. Estimates placed in the okay, about 6%. I thought it was 4, but it's 6. Um, we're still similar, but at the same time, it's different. Yeah, because I made my rule, like my biggest thing about having, about whatever it is that you trade, you should be able to know, you should be able to have every single definition to every single concept that you use, and then how do you use those concepts that you have to build models? And those that models have to have definitions as well. So the reason why I asked that is like it's actually like a very common saying where support and resistance, like all of these models, like all these quote unquote retail models, but it's, I don't like saying that because it's not true. They're all retail models. Um, that if they follow SMC, then, or SMC logic, then by default they're more than likely going to work, and that's why they work. But I'm not of the belief that it's SMC. It's actually a bit deeper than that. It's considered manipulation. And if you understand manipulation, right, across industries, across niches, across business, if you understand manipulations as a whole, then you can really capitalize on in almost any industry that you become a part of. And I'm not gonna apply that into business and all that today. Like, I'm gonna leave that for the book because I do have some examples there. But it pretty much, the sleep model is, let me see where the oh, right here. Pretty much the sleep model in and of itself is, right, using the manipulation of a range, right, to get an entry to then continue lower, right? And if you can combine, just because of market fractality, if you can combine ranges within ranges within ranges, then this small entry could be, right, this external range low, and then this is how you get a very high risk to reward. But it's so consistent because you're using market laws, and I'm actually going to list out the market laws for you right now. Excuse me, I'm not going to show you guys the whole document, but I'll show you guys the market laws. Right, like if you guys can apply these 4 laws into your trading, right, these are kind of just absolutes. And the reason why they're absolutes is because this is essentially the 4 things that I've seen and researched that have kind of just stood the test of time. And this is why I'm also like a big Wyckoff guy. Right. You guys note these down, like just so you guys can remember this stuff. And did you guys remember these like the back of your hand? If any model, any type of entry scenario, any type of model that you have, if they follow at least a couple of these market laws, then more than likely you will be fine over time. Oops. All right, these are the 4 market laws that have stood the test of time, at least since Richard Wyckoff was around, which was a couple 100 years ago now at this point, I think. I have it here. Yeah, well, yeah, about 100-ish years. Um, but the reason why these are so important, right? Liquidity must be sought. What is our framework? DLE, right? We have the map, right? We have the timing, and then we have the entry vehicle, right? But how I had it in book 1 was we have direction, we have liquidity, we have execution, right? We have, right, where we're going, right? Now we have liquidity, which is the fuel, the gasoline to the engine, and then now we have the vehicle that's going to get us there. So liquidity must always be sought. Obviously, we need fuel to continue lower because that's how we attain timing in the market, right? But now, which timing do you look for? Well, that's depending on direction. Like, what's the map saying, right? We're bearish, right? So if you acquire liquidity, which would be acquire gasoline, then if we have an entry criteria, whether it's the engulfing here, right? Let's just say that would have been the engulfing for the implied sweep, right? Then we now have the map. We know where we're gonna go. We have the fuel necessary to get us there, and we now have the vehicle to pretty much take upon that action. So you get the result that's kind of there, right? And number 2, manipulation precedes expansion, right? That's what a CBOS is. That's why we're always in the mindset of continuation over reversal. We've been saying that for years, right? So if we take the initial point, the initial a low, it doesn't matter what time frame, it doesn't matter um what structural level you're at. The first in a downtrend, the first break of the internal high that creates a new low is always going to be a CBOS. Because for years, I'm probably not the only one, but for years, I would want to buy every single time that I get that. But really, now we can see it as liquidity, right? To then continue lower, right? And then after that swept, and then now if we have some type of transition or something, okay, now I'm going to want to be bullish because the completion of the move is done. But pretty much all rule number 2 is a CBOS is necessary to continue lower, or you should always anticipate the continuation lower when you have a CBOS, right? And then human psychology creates predictability. Okay, well, this is a false break. No matter what you say, a manipulation is a false break. And a false break is going to incline people to be bullish in some way. Like Like I can guarantee you there's a lot of people that saw this scenario and they see, oh, maybe we swept the low, now we swept the high. Okay, let's look at the sell to buy and let's buy. But no, it's just why are you fighting momentum? Right? Like I just showed you guys here, right? We are retail is 6% of the entire money in the FX market. Trust me, we do not move this, we do not influence this at all. Right? What like it's smart money against smart money, and we are not smart money. Right? But direction is going one way, and you could read this in a bullish bias, or you could read this in a bearish bias. So that's why we have the DLE framework, right? And this is just showing or inclining or pushing the narrative that this is going to go higher. But you want to always focus on continuations, not because you want to beat whoever it is that you think that you're beating, but you want a framework that follows momentum. And it just makes sense. If you're bearish, why are you not continuing a bearish move? Now you just need to understand that this is necessary for this to occur, right? And then fractality of price. Obviously, you guys know that models are models of models of models, right? And if you guys don't understand that, then let me see. Right, so this leg, right? So we have a bearish leg here, which is pretty much at the time. Right, if we have a structural bearish range here, but if we zoom out, then now we now have a structural range here. So pretty much all fractality of prices is that everything is always occurring on every single time frame, right? Just because in order to create one, you must create all. So whatever happens on M1 is the same thing that happens on month one. But yeah, if you guys want some free sauce, that's my free sauce for today. Market laws. If your method, whatever it is that you trade, I don't care if it's support and resistance, I don't care if it's Eddy wave, Fibonacci. Um, Anybody telling you that a method doesn't work is probably trying to sell you something because it's not about what you're using, it's about how you're using it, right? Like you can't compare trading to a job. I compare trading to a sport because it's not about getting some type of equivalent value of the time that you're putting in to then make some money. No, like you can always put in so much time and never get anything in return. Whereas if you guys have ever played sports, like technique is usually everything. Like I played collegiate sports, I didn't play professional sports, but and then I had like my injury streak. But in that, right, there's whenever I was training for college, it was nonstop. It wasn't anything insane. I'm not saying that I trained like a pro, but it was days, weeks, months, right, of honing, right, technique, right, to potentially play at the highest level, right, or at the highest level collegiately, whatever. Whereas here in trading, it's you're honing and you're putting in time, weeks, months, etc., to build the technique of how to find a trade and execute upon it and then exit, right, appropriately, right, to then potentially make some money in the end. So that's technique. That's not necessarily an exchange of time for money. So hopefully that makes sense. But free sauce for today. Now we can get into the case studies. But yeah, this is stuff I talk about in the book. What about ICT? What about ICT? ICT is another method. ICT is another method. What else is there? I could be mistaken. Like there's like even indicator strategies. If they follow manipulation, then you're fine. If anything, if you want to be safe, like really the best bet is to try to find some type of momentum strategy that's based on manipulation. Seeing better result than SMC. Yeah, man. I mean, it's only been a month, bro. So like you can't really have that much of a you can't really say too much after a month. Like we have to reset expectations. Like let me know what happens over a year. And then after that year, if it's improving significantly, then lit. But for now, yeah, let's go ahead and get into the case studies. Let me delete that. But yeah, that's like the introduction of the book, basically. Like that's part of it. I know somebody left some case studies in the public chat. Sorry. Okay. Okay, nice. Okay, very good. Okay, so I see. Okay, so Mike isn't on the call today, but he wanted me to review his trade, so we'll go ahead and do that here quickly. So I like it. You're starting to see what I meant about the continuations and not forcing the reversals. Like back then, you would want to buy here, like maybe like not back then, but like 2 weeks ago ish. You would want to buy here, right, and aim for like this. Right now, you're starting to see this a little bit differently, which is good because obviously you're bearish. You swept here, right? You broke here. So now you're kind of just looking for, right, the movement downward. And I like that the invalidation is your stop loss. So this is kind of just textbook following direction. Very good. Very, very good. But I will say, right, once you see the sweep here, oh, sorry. Once you see the sweep here, right, this is the range that you're kind of playing in now. So if you have taken the high of the range, then expect to take the low of the range. Like just take your profit here. Um, like be confident in that because you're directionally bearish. You've already gained the fuel to continue the direction, and now you're just following that. But yeah, overall, very good first trade. Okay, OFD, yes, yes, no, no. I don't consider this OFD. The reason why I don't consider it OFD is because the POI, this POI, if this is what you're considering to be OFD, has to completely break. And like if you have the reaction here, right? And you have the reaction here, which is determined by the internal reaction. Any type of wick high is taken out. Then then you kind of want to wait for that POI to break and then use the buy to sell to find that. So here I would more so consider this a structural disruption because your low, high, right? We have a low, right? This is now solidified based on the break here. So we have a solidified low, low, high retracement. We then have this low here, an internal low be solidified, and then that's broken. So that I would consider SD, which is inherently the model that's reversal based. But yeah, that ended up working out. I'm pretty sure the direction externally here, because it looks like there's a POI here. It looks like that was externally bearish, but internally it's just bullish. So this is the SD model, just so you know, SD. But yeah, overall very good. And once this breaks, I would just use to be safe. I would use the buy to sell here, and then the SL at invalidation. So it would put your risk to reward a bit lower, but you're guaranteeing that you're in the trade. And here, I would not aim for here. You're either going to aim for this or you're going to aim for this because this is the sell to buy that created that move into the upside. So that's a minimum target for you. But if you're externally bearish, then you could even hold this to the previous low, right? Because if we're looking at this in ranges now, right, we have the range, we have the manipulation here, the sweep here, right? And then once this technically breaks, then if you're taking any kind of scenario, then you can aim for the low. Right. So everything is kind of based on manipulation, just to time the execution. Okay. Externally bearish. CBOS, right? CBOS. So we're anticipating the continuation, and there's actually order flow disruption here, right? Minor order flow disruption. We can see here. And then yes, we do have this internal LG here, which would be considered potentially an SD. The reason why I say minor is because yes, we are giving the reaction from the POI, but we're not technically breaking any type of structure or wick high. So the reaction might not technically be valid. So this could just be, right, the solidification of this high. So based on this high, right, we're solidifying that. So internally, this is I mean, X-ray is a CBOS, right? So we have high, low, and this started the retracement. But let's just say that's right a scalp, but the micro internally is bullish. So technically, there is bullish structure. And that microstructure here, right, that solidifies that low. But then once this is kind of solidified here, right? And then once we have this low, take out that high, then that is now pretty much continuing that micro bullish structure. And once that micro bullish structure is then broken here, then any type of criteria you take here is valid with your validation here. That's fine. I like that just because this is the high that took out the low, right? That's pretty much invalidating that bullish microstructure, right? Hopefully that makes sense. And I believe he took the entry here, but I personally would have, I think you're ready to take your entry, like even from here, anywhere in these three candles. But let's see how this played out. Okay, so this didn't work out. So this is not a model issue. This is not a model issue. This is a management issue. So, for example, your entry, right? How you develop the idea, everything in terms of that is correct. But, right, we now have this, right? You're pretty much your point of entry here. We have the reaction, and then now we break through. So once we break through, that's OFD. So that's more of that's a reason for you to just kind of exit the trade, right? Which is fine, it happens, but this is I just want you to know this is not a model issue. Like if you were to get the same execution again 5, 10, 15 times, you should always take it that 5, 10, 15 times. But now you have to understand here that this is not a management issue, right? DLE is how you pretty much get into the position, but this isn't really the management side, right? Whereas if we're looking at invalidations, yes, this could be an invalidation, but this can also transition back into being bearish after this break, but this isn't a break, this is a sweep. But really, the main thing I want you to note here is that there is OFD because we took out this low. So if you want to aggressively try your stop just because of the OFD, that's fine. But I wouldn't, outside of the OFD, I wouldn't try my stop here. I would just acknowledge that this is a high momentum move plus OFD. So it's fair to cut your position here. It just shows that your timing isn't necessarily ideal. But overall, still a good trade. I still agree with the execution. I think that's it though for those case studies. Does anybody have any trades they want to show me? If you guys want to put it in the free Discord, or if you want to put it in the chat, that's fine. Cool. Send me some charts. Send me some charts, guys. If not, we have quite a bit more case studies, but let's see. Maybe some people are loading up some charts. But yeah, well, people are sending. I'm probably going to give you guys like maybe 10 minutes, see if anybody has any case studies they want to review, and then we can, or any more questions you guys might have. Okay, so this is what you're in right now. I like it. So what's your reasoning here? Okay, following minor legs. I do like that. Yes, there is a clear structural internal range here, and this is technically a turbulence point. But I do like that you waited for this to break. Once it's broke, then really anything in terms of this sell to buy, I mean this buy to sell, sorry, is valid. Anything in there is valid. But now you're kind of approaching the end of the day. Like I don't know if this is gonna sweep. So I would probably just aggressively move my stop here just because it's the time of day. And this would be an SD, right? If that. I think you sent the same chart, bro. Sent the same chart. I think you sent the same chart. You see here, I don't, are you already in this entry? Or are you waiting for this entry? I don't understand. And when was this too? This was the 16th. What was the result here? Like, do you have your after image too? Okay, hello. Okay, I see. Yeah, the execution is fine. I don't think it's a model per se, but I don't disagree with it. I think the break of here is unwillingness here to go higher, so it's a perfect perimeter to enter and go lower. So that's fine. I just now think because at the end of the day, it might make sense to aggressively try your stop or just kind of close out for the day. Mm. Okay, so let me see this again. So first of all, I would clean up your charts, bro. Like for example, I don't see the need for all these grid lines. I don't see the need for the grid lines. Um, I think you're too zoomed out on this time frame. I think like if you're gonna zoom out on price, like you want to at least be able to see the candle, the bodies of the candle. Like for example, here, if we're looking at my chart, like this is too zoomed out in my opinion. I think you're too zoomed. You can't even see the candles here. So I usually like to have at least I want to be able to at least see right the candles that are on my chart. And if I want to zoom out and it's too I can't really zoom out, then I'll just go another time frame up. Right. I don't know how to explain that. It's a bit hard. Um, it's a bit hard to explain that, but I don't want to not be able to see my candlesticks whenever I have like, a chart loaded, if that makes sense. Okay. And as far as execution goes, um, I don't disagree, but I don't think this is like I don't see a model here. I don't for example, like if I'm looking for a trade here, right? This is low into high, right? Then I'm looking for the transition here. Right, I'm looking for a transition here, but is that where you entered? Like I don't. I'm a bit confused here. Like you entered here, right? Yeah, okay. So I wouldn't just enter based on the POI because your sell to buy is here. Like this is your sell to buy that caused that move into the upside. So because of that, I want to look for something internally, right, to give me the confidence that this is going to go higher, right? Or at least give me a reaction. So if I don't get that, then it usually doesn't work. Like if I don't get my reaction, if I don't get my criteria, then I usually won't enter the trade, right? Even if it then comes back, right? Because you can see it looks like you kind of had the wrong direction as a whole. So I would more so look into how you built this bias and figure out what figure out why this is not going up, if that makes sense. After having unwillingness, I don't understand what you mean by unwillingness to the POI, bro. I don't understand what that means. Like unwillingness, and it depends on what level unwillingness you're talking about. For example, here, right, you just broke here, so internally this is bearish. So until you break this high, like you can't really like say anything in terms of like there's unwillingness to the downside. At least not on this time frame, right? If you're going to M1, then maybe it's a bit different, which is maybe I think the image that you showed. No. Yeah, you see here, like if I'm gonna be in this buy, I would have already wanted to be in this buy if that makes sense. But yeah, I would also try to like, for example, this is another thing that I find hard to implant in another trader is like how can I make my charts coherent to where anybody can read what I'm trying to look for, all right? Whether it's with a box, whether it's with notes, whether it's with um I don't know, a bunch of lines, like as long as your chart is coherent, then realistically that's like you'll be fine. But yeah, see, like I said here, or like at least I'm more able to read what you're trying to look for. So here, like I said, right, the reason why I switched over to sell to buy zones and not necessarily internal POIs, like at least not the trade off of, I can note these, but I won't trade off of these because I'm noting this, right? And that, if you look at your last image here, right, this entire candle is that sell to buy that I'm talking about. And that hit target. You see what I mean? And if we're looking now at the internal reactions, right? Because this is where I had my buy. My buy was here. Right. And if we're looking at this POI here, and we're looking at reactions internally, okay, we have this is like like first course stuff, right? We have series of lower lows. I mean of lower high, sorry. Lower high, lower high, lower high. And then this is where that OFD happened, right? Once we had this break. So then that's when I entered there. So I wouldn't enter based on the POI. I would enter based on the reaction. Does that make sense? Yes, no? Because, for example, the you even noted the proper invalidation. Like the low of your range is the invalidation. So if you're gonna take any type of trade, like this is your invalidation here. You saw the manipulation, yeah, but you didn't use the invalidation of the manipulation. Like, yeah, the manipulation is there, but you have to use the perimeters of that manipulation because you can lose a trade. Like the reason how you know that you're using an invalidation or not is if you can lose the trade and the play can still play out. If that's true, then you aren't using the invalidation. Does that make sense? Cool. So, any more case studies, guys? Any more questions, concerns, anything you guys want to talk about before we finish off for the day? We're still building also with everything asset. We're still kind of still working on that in the background. Let me find that chart. Currently have three models running. I'll show you guys here before and while everybody's either typing a question or something. Uh, okay, here. So actually, let me sign in right quick. Okay. So yeah, these are pretty much all the models that we're running, and these are pretty much this is my testing phase account. This is my testing my fixed book account, and then I have like the other one, which is where the real accounts are, which is the two accounts that I show on 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 a frequent basis in the Instagram, the broadcast. But yeah, we currently have three running, and kind of just trying to see what the numbers are and how they adjust without having too much drawdown. And let me see if I go to portfolio, I actually see better stats. Like you can see when I started these systems. So this is a hedge model, buy only model, buy only model. Um, and then I'm still working on a bunch of other different models as well. A lot of these are gold based, some of these are FX based, but I'm still kind of figuring this out. Like I don't even know like if I want to accept like people or even like make this a subscription or anything like that. Like I don't even know if I want to do that. Just because it's I don't know, I would want to figure out if it's even worth it for me and my time. But yeah, this is kind of just what we're working on right now. Like this is my number one model right now. That this is like one of my models that well, this is one of the main ones that we're using right now. And the reason why I use demo account just because the execution is easier. So then once I plug in my live account and on the copy trader, then it's actually way easier to get that execution and get the fills that I want. That's why I put all of these each in demo accounts. But yeah, this is my one of my best performing models so far, kind of averaging about 0.2% a day ish, 0.2% a day. Because for example, the main live account, it did 122 today, and then the balance I did about 0.7% ish today, unless I'm mistaken. Well, let me just do this. Yeah, so it did about 0.7% today. And so I'm averaging like 2% on that account. And then on the new case study account, I'm averaging like 1% a week. But yeah, that's kind of just concludes everything I have for today. Unless you guys have any more questions, concerns, then I will probably go ahead and sign off for the day, guys. Unless you guys have any more questions. Cool, guys. Thank you guys for hopping on. I will upload the recording here in like maybe like next hour or so. There's a case study on the Discord. Sorry, sorry, sorry. My bad, guys. My bad. One sec. Okay. My bad. My bad. Okay. I see. I would widen your chart a bit more here if you hold this and down or up. If you hold and then go one direction, you can widen your chart. I would widen your chart up. The reason why I say that is because I want to be able to see the trend that I'm kind of trading in. If you compress it, it does make the trends a little bit harder to see. but it looks okay. But you're kind of trading at all-time highs, aren't you? Like, is this all-time highs? Like, I like the execution actually. I like the execution is actually really good. It's because you're using the entire sell to buy within the perimeter of the internal invalidation. Even though this is the external validation, I'm not opposed to using that. That's fine. And you're entering based on the potential inefficiency with SL there. That's fine. I like that. Yeah, it's all time high. That's a big reason why I don't like I've been kind of staying a little bit away from gold. Just because I don't like trading at all time highs because okay, you're like if we're at all time highs, is this at all time highs right now? It is at all time highs now. So like if you have all time highs, then how are you determining a target? You see what I mean? Like that makes it really hard for me to I'm not saying that this is the trader's idea is wrong or anything like that, but I'm just saying that it's harder to judge an entry, I mean judge a target whenever we're at all-time highs. Like this is the as high as prices ever gotten. Not saying that it's not going to go higher, but how do I know it's going to reach here? Right? There's really no way outside of like a projection of like a fib extension, right? If you do like low, high retracement, and then this could be like the negative 161.8 or something like that. So the entry is good. I just don't like trading at all time highs. But yeah, if there's nothing else on top of that, I'll probably go ahead and call it a day for now. Cool. Any more questions, concerns before we sign off for the day? Cool. Thank you guys for hopping on. I will see you guys in the next one. Sure. Maybe next week. Maybe I could even do these a little bit more after I finish all the projects, but appreciate you guys hopping on.